Hello trade pros, we're back with another video. You guys asked for it, you guys requested it, and today we're going to be doing just that. We're going to be talking about order flow and Nasdaq futures. Nasdaq futures have gained a lot of popularity due to volatility, movement, and obviously opportunity and potential over the last few years, especially over the last few months, considering how this market has been moving. So I want to welcome you all to our channel, right? It's been a while since we posted one of these videos, and if you're new to the channel, go check out what we got in store, because we got a lot of stuff on order flow and volume profiles, auction theory, everything futures related. So welcome to our channel. I hope you enjoy this video. Sit back, relax, and let's take a look at what we have in store for order flow when it comes to Nasdaq futures. It's going to be a beginner's guide to understanding order flow in one of the most volatile equity markets that we've seen and that we trade. So let's dive right into this right after this intro, and I'll see you guys on the other side. So first and foremost, here on my screen, you have two separate charts, right? This is on Sierra charts. If you're interested in the depth of market, there is a link down below. You can grab that. But generally speaking, these are the two main charts that we're going to be discussing today. So when we talk about Nasdaq, when we talk about order flow, we first want to define order flow, and we also want to understand what Nasdaq is and give it a few characteristics, because markets are different, right? Different equity markets behave differently. They require a bit of different finesse. So I think it's very imperative to understand what we're looking at first before we get into it. So when we talk about order flow, right? Order flow is how market orders come in and out of the market, right? Supply and demand comes in and out of the market that dictates the strength or weakness of market participants. That also dictates movement and direction. So when it comes down to order flow, one of the base cases is the depth of market, right? Commonly known as level 2 to some degree, but the depth of market is the chart that we have on the left here on the screen on Nasdaq. So in terms of order flow, what a lot of traders have come to terms with and started to understand, right, very recently in the futures market, is imperative to understand how this depth of market works. So as traders are getting smarter, they're evolving, right? As the futures markets evolve, a lot of people are staying on top of things. So understanding the depth of market is one of the key tools here that helps us really understand how futures move. And this is one of the main topics that we cover on this channel. So when it comes down to order flow, we want to understand how buyers and sellers interact with one another, who has more strength, who has more movement, who is overpowering who, to give us pretty much direction, to give us trades, to give us the basis of where this market is expected to go. So when it comes down to the Nasdaq is a fairly volatile market, right? It moves a lot. It has big swings, which makes it extremely attractive for traders to get involved, because you get a 20, 30, 40 point move. That is some pretty big opportunity. The Nasdaq futures, they're $20 per point of value. So what that suggests is that every single point movement is going to be $20. So for example, right now we're trading 18,533 quarter. If we move down 2 points, right, almost instantaneously just there on that yellow marker on the screen, that's a $40 drop per contract. Obviously, you do have the micros, which is 1/10 of the size. It's a very popular instrument. And the movement and volatility of the Nasdaq, how quick it moves, you can see here on the DOM itself. It's very quick to fluctuate. And what that tells us is there is inherent increased risk, volatility, and movement naturally in this market itself. So if we compare it to another asset like the S&P 500, the S&P is a much more calm and tame market. To give you a better understanding of this, the Nasdaq on average moves about 250 points on a given day, right? On a given day, the general movement is about 250 points. So if we assign that a dollar value, that's $5,000 worth of movement, right, per singular contract on a given day. The S&P On the other hand, is, I believe, about 20 to 30 points on average of movement, which if we assign that a dollar value, right, it's $1,000 to $1,500. So you can see there's a very, very big discrepancy in terms of the movement potential and the volatility between these two assets. So what that means is Nasdaq is faster. Nasdaq is a faster market. Nasdaq is comprised, right? It's based on the index of the Nasdaq Composite. It's comprised of very, very heavy tech names, right? The majority of the Nasdaq is tech-based. Tech is a higher beta asset in general. It's long duration, it's higher beta, which suggests that there is more volatile movement when you compare it to a benchmark as calm as the S&P. The S&P is a general benchmark that we assign a value of 1 beta, and tech stocks, right, they generally have higher betas, meaning that one general movement like 1% in the S&P is usually multiplied times over when you talk about tech names. So Nasdaq being a very tech-heavy index suggests that the volatility in the movement is higher. That means also, in terms of order flow, it's a little trickier to break down, because when we talk about order flow, we talk about the depth of market a lot. I'm going to give you a beginner's guide today of understanding where to start with the Nasdaq and order flow, because the depth of market is in itself, right, regardless of the asset, a little more difficult to comprehend, right, for newer traders, and it takes a while to get used to it. So the depth of market, as we know it based on our past videos, based on other resources that we've made in the past, it's comprised of multiple different columns. When we look at the depth of market here on the Nasdaq futures, there are a few things that I want you to kind of gravitate your attention to. These columns here, right, on the left and the right, you can see I'm highlighting them, the red and blue. These are what we call passive orders, or just general level 2, where you have limit orders of traders coming in. I think it's a common misconception that a lot of people put 100% of their emphasis on this, when in reality it's not of highest importance. A lot of people look at this as liquidity, seeing where large orders are, which has some kind of merit, but generally speaking, it's not going to magnetize price just directly into that area. The two main aspects in terms of reading order flow are going to be based on market orders. Market orders are what actually comes into the market and creates directional movement. For example, if I say that there's net 1,000 sellers and there's net 300 buyers, the general anticipation of the movement of the market would be to the downside, considering the sellers are grossly overweighing the buyers. So this only happens when we have a base understanding that market orders are what is active in the market that generates direction and movement. So when it comes down to market orders, the first two things that we have to understand are these two middle columns here, right? The red and the blue numbers that are very, very small here on the Nasdaq. So these red and blue numbers, these are market sellers in red and market buyers in blue. So they're very small, right? They're tiny. If we compare it to the S&P, right, at the current moment, you can see that these numbers grossly overweigh on the S&P compared to the Nasdaq, right? On average on the S&P, we have about 150, we can say, is the average. On the Nasdaq, right, the average is about 5. So when this thing starts moving super volatile and you're sitting there looking, staring, eyes are bleeding, looking for numbers that are greater than 5 as this thing swings up and down 15 handles, it's going to be a fairly difficult task. So there's another aspect that tells us how these market orders create balances or imbalances in price. We're very concentrated on how prices are imbalanced, right? When an imbalance occurs, that generates some kind of directional movement and bias in the market. So when we talk about imbalances, and one of the easier ways to kind of navigate and spot this is going to be delta. Delta is the difference between market buyers and market sellers contract sizing at a specific level, right? Or at a specific time, depending on what kind of delta you use. The delta that I'm going to be breaking down today, which I think should be the starting point when you're looking at NASDAQ futures and trying to discern order flow, that delta is going to be based on the side profile here, as well as you can create a delta histogram chart that is overlaid on a volume profile. So you can get a very good understanding of where these imbalances and discrepancies are. So we'll leave aside these middle columns for now because I think that's a little more advanced step on order flow in terms of the Nasdaq. But a general rule of thumb, when I start to see 20, 30 plus market orders coming in, that's when I start getting a little more active in the staring and letting my eyes bleed on this Nasdaq to see who's in control. In comparison on the S&P, it's probably around 300-400. So it's a very big difference and more easily defined, if you will. Now, when we talk about delta, like I said, delta is going to be the market buyers minus the market sellers at a specific area, right? The quantity in itself. So that tells us that heavy positive delta means that there is an abundance of market buyers in comparison to market sellers at that current area. So in Nasdaq, when we start understanding and reading order flow, I want to identify where these more aggressive, larger imbalances sit. So when it comes to delta, if I had to assign a number, right, a value to it in the Nasdaq for me to start getting interested, I'd probably assign a value of 150 plus, meaning that if there are 150 net buyers or 150 net sellers, right, above their counterpart, that's when I start getting interested. So when I look at delta, I look at delta in its formation at current price and movement, meaning, for example, let's say right now, Nasdaq's trading at 535, right? And let's say over here, we start to see a large accumulation of positive delta, which tells me, like, for example, let's say between these 3 points, we get every level that's 150, 250, 350 plus, right? That generates very, very thick positive delta. And price rejects multiple times, right? It hits it, they sell it down aggressively, 10, 5 points. It hits it, they sell it down aggressively, 10, 5 points. For me, what that's telling me is that, okay, there's a lot of positive delta, meaning there's net buyers in this scenario. However, they keep getting sold, they keep getting sold, they keep getting sold, which is telling me that, okay, these guys are probably trapped and there's going to be some kind of reversal. When it comes to positive and heavy negative delta, it depends on where price is and how it reacts to those levels. That gives me more of an understanding. So, for example, right, the delta confluence over here that was created yesterday, right, we had an abundance of sellers coming into the lows of the session, creating these fairly heavy negative deltas that were clustered time and time again. And this was started pretty much off the open of the session, and you can see how prices generally reacted to these levels, right? So they come down, they sell a lot, they bounce, they do the same, and we hold around 540 on the Nasdaq, creating some pretty aggressive up moves until, right, we get this drastic drop to the downside, right? And now that we're below this large clustering of all this negative delta, these sellers are fairly happy. They're pretty happy with what they've done. They're back on the flip side, and they would want to hold control of the sell that they've created to the downside, meaning that this area becomes an area that we want to watch very closely to see, okay, are more sellers coming in so we can continue that directional movement to the downside. When we have these very exaggerated deltas, whether it's on the DOM here or on the visual aspect of it, right? We can see over here, for example, this imbalance sticks out like a sore thumb, right? 430, it's very exaggerated over here, right at 478. So when this prints, right, and we get a very strong, aggressive move to the upside, right, from that area, you can see over here, right, we get this very nice run, we pull back. What happens at this area? This tells us, right, if we get a very, very imbalanced buyer and prices shoot up super aggressively, it tells us that these buyers are really strong. They want to sustain price. They want to sustain this movement. So this becomes an area where we're interested in looking for that buy side and that momentum shift to the upside. So this tells us where these buyers are stacked up. It tells us where sellers can be stacked up. So from here, we get this very strong projectile from that massive buyer that comes into the market. We can look at this historical tool here, right, to give us an understanding of where deltas are clustered where deltas are very exaggerated. These large imbalances help us understand where price is going to be imbalanced and where we expect some kind of very aggressive movement from that area. So, for example, right, like I said yesterday, we had this very, very thick negative delta that was created at that price. And we had these very, very interesting buyers, not only on the overnight, but on the day session itself. You can see these two extended blue areas where large market buyers came in. So in and around this block, realistically, I would expect to see some kind of attempted exaggeration to the upside based on what the scenario was. On the other hand, right, if I see delta that accumulates at these highs, right, so very positive delta that's sitting at 18,600, 18,615, very, very thick positive deltas on the overnight session. So when I'm looking at this and I'm trying to identify what's going on for the day, I can look at this and say, okay, well, at this point, right, this can act as some kind of a resistance level where these buyers failed because they added, and then all of a sudden we get this large push to the downside. We got about a 50-point drop from that area. So in the session itself, right, when we open, and should we come back into that area, I want to be very cautious and see, okay, is there going to be a formulation of very positive deltas again, prompting some kind of aggressive rejections in price at that same level where these buyers had a very, very difficult time, right? So we get back up into that area, right? This is on the day session itself. We get back up into that area. We get multiple rejections, right? 10, 15 points. Every time they come up, they buy a bunch and then they slap it down. They buy a bunch, they slap it down. What I'm looking at that area is, okay, these guys are probably trapped again, and there's most likely going to be some kind of turn to the downside. And lo and behold, we got this large rejection. So now that we have this information, sellers, right, they want to hold prices out under this 540, 550 area based on what we saw yesterday. It's going to take a lot. It's going to take a lot of buying to get above that level. Now, if that happens, there is a massive, massive opportunity for us to just get long and spring this thing to the upside. But we want to lean short with the massive sellers that actually won this battle. So when it comes down to Nasdaq and understanding, the beginning of understanding how order flow kind of shapes things, I think it's very important to understand the imbalances and where they sit and how they're created based on something like delta. Instead of trying to blindly just read the DOM as you would the S&P, understand that these guys they have different personalities. They have different characteristics in terms of volatility. So a good starting point is being able to identify where the imbalances have been created and where they're being created as price trades in them. So going forward, watch, right? If you have areas of interest on the Nasdaq, but you're unsure if they're going to hold or not, start identifying how the delta gets created at these areas and the reaction. In terms of order flow, reactivity is extremely, extremely important, and the speed at which it happens. Because you could potentially see a lot of buying into a high, but if there's no selling and no pressing it down, you're most likely going to get this massive spring up, and you're going to be shorting blindly without really understanding how this order flow is expected to form and create market movement and direction. So when it comes to Nasdaq, again, I said it's more volatile, requiring a larger stop than you would on the S&P, but also understanding that you could have a larger potential profit than the S&P. Study the delta. Look at historical delta in relation to volume profiles and specifically the depth of market. As you get better with reading the depth of market and how the delta forms in areas, start identifying where large market buyers and sellers to the value of 30 plus on the Nasdaq DOM appear, and you can get a lot more information, right? Replay, and practice is going to help you read this market a lot better in comparison to how volatile it really is going to take a decent amount of time. So I want to wrap it up there. I want to move on, right? If you guys have other topics that you want me to cover on Nasdaq, maybe we can do some replays and whatnot, identifying traders that are trapped in momentum moves. Drop some comments down below, but don't forget, hit that like button, hit that subscribe button, and remember, check out TradeProAcademy.com where we trade Nasdaq and the S&P on a day-to-day basis. with a plethora of different opportunities throughout the week. So I'll see you guys in there. If you got any questions, drop them down below. If you like this DOM, there's a link in the description for you, and we'll see you guys next time. Thank you all. Thanks for coming to TRADEPRO Academy, and check out more videos that we have on order flow and volume profiles.